Hello, everyone. Could you please confirm me? Is my voice audible to each and every one of you? All right. So I welcome you all to the second day related to game-changing webinar session. My name is Saniya Asif. And in last session, we had discussed all the important tips and the tactics that we need to apply for the sake of handling our exam, the common mistakes students usually do while handling their exam, and for all those students who are going to reappear in their exams, depending upon the marks that they got in the last session, what type of strategy, what type of concentration they now require uh, for their exam to be passed this time. So let me sum it up over here. What did I say to you people last time? That you need to attempt easy question first. You really need to keep an eye on the time. Whensoever you're going to start handling a certain section, you really need to keep that fact in mind that by what time you should have finished that particular section. And for instance, if there is a question which is creating a confusion, then don't spend time on it. Rather, just leave it and move to the next question so that your target is not going to be disturbed. And then when it comes to the descriptive question, you really need to plot your answer according to the marks which are associated with the requirement. So if there is required an explanation for worth 2 marks, then you will be producing 2 valid points. And if an explanation would be requiring 3 marks, then you will have to produce 3 valid points, and every point should be of maximum 3 sentences, maximum 3 sentences. I'm not even in a favor of like making the 4th statement unless and until it is like unavoidable. And sometimes when you are producing a valid statement, it may be covered up in even a single sentence. So as long as you're going to explain the whole thing by making a single sentence, as long as it seems a valid point, then that's fine. There is no need to make unnecessary paragraphs for the sake of making your justifications, for the sake of like making the lengthy explanations. And instead of like making one single paragraph, you will be making smaller paragraphs, smaller statements, so that examiner may easily pick up that how many valid statements you have made, and he will be like relating it with the marks associated with the requirement, and that is how you will be basically given the score. And then you really need to focus on the verb. I mean, what is your examiner asking for? Does he want you to calculate? Does he ask you to make an explanation or to give a description? So really need to focus on the verb. And of course, technical knowledge is like very important. And while attempting your exam, do not make lame statements, rather try using professional language. So these are like few of the tips that you need to keep in mind while handling your exam. And we did practice 2 questions out of section C of June 2025 exam attempt last time. And now I shall be discussing the last question of section C, which is comprising over corporation tax aspect with you people. And afterwards, I'll take you to section A and B. But this is something which I have chosen from Specimen Exam of UK, because I did mention you about this thing that all the exam attempts which are available on the study portal are not something which you can attempt easily. The specimen exam, the practice set 1 and 2, June 2025 exam attempt, as well as the pre-September mock. These are like some of the practice material which you can use for the sake of creating a good grip on how the exam portal should be handled. But don't do September 2025 pre-mock right now, because this is something that we will basically be giving you for the sake of practice purposes. So this is something which has to be done in the last. Okay, let me just take you to the last question of section C. And there you go. Here is the question. Once again, I'm going to give you a certain time period in order to go through the content of the question, and then I'll discuss the solution with you people. So kindly start reading the question. There's a concern. Can you clear the meeting is being recorded notification? Just let me know if now you can view the whole screen. I did not know that thing that this is creating a hurdle, but I unfortunately cannot exactly remove it. But I have changed its position, tried to change its position, but is it now manageable? All right. Let me scroll up the screen because I believe that you must have gone through this information. Do update me once you're done reading this information as well so that I may scroll up the screen. I hope now you must have gone through the entire information, which is why I'm going to scroll up the screen. Do update me once you're done with this content as well so that I may scroll up the screen further. But now a very little bit of the information is left behind. I'm gonna take it further, but technically it's just the requirement where now I have to take you towards. So technically not even a single statement related to this question is left behind. So can I change the size of the screen so that we may read the requirement of the question properly? There's a concern that I have read out the whole question, but what happens that I don't know from where to start in such type of questions. Guide me. Now you need to, first of all, you need to focus on the requirement of the question, right? And just follow that how the things are to be executed. Now it is requirement A of worth 7 marks. And here they are asking to calculate the tax adjusted trading loss for Flight Path Trading Limited for the year ended 31st March 25. So this is basically a company, because with the company either we'll be using LTD, a private limited sign, or a public limited one. And the company has got a choice to make accounts according to their own will. They may make accounts for 12 months, less than 12 months, or even for more than 12 months. But whensoever it comes to corporation tax computation, it is the accounting period for which corporation tax liability shall have to be computed, and and the accounting period can never be of more than 12 months. But here we are not calculating the corporation tax. We are just trying to figure out the adjusted figure of company's loss. And this has to be figured out with respect to the period of account. So they've made accounts for the year ended 31st March. Now you need to follow the notes as well. It says that your computation should commence with operating loss figure of 162794. And whether it's like an operating profit or the operating loss, you always be like taking a start with this figure and indicate by the use of zero any items which do not require adjustment. And you should assume that the company claims the maximum capital allowances. See, in your syllabus, whatever the capital allowances you have learned, you will be calculating it properly and you'll be like claiming it. I mean, you'll be making the complete adjustment. But basically, practically, there is a chance, there is an option that when any individual or company would be calculating their capital allowances, they might not be deducting the whole amount. Rather, they'll be claiming a lesser amount than what they have computed. But this is not a part of your syllabus. So if in case this note wouldn't have been mentioned, either way, we knew this thing that whatever the capital allowances computation we come across, that is going to be totally adjusted. All right. So what do we need to do? We'll have to adjust the trading loss, because neither the accounting profit nor the accounting loss is acceptable. And where do we need to take a start? They have told us that we need to take a start with the figure of 162794. So where is that 162794? Here you go. It is like operating loss figure being mentioned over here. And from here, we will be start doing an adjustment. And in case of companies, do you remember that do we apply cash basis of adjustment or accrual basis of adjustment? And be very clear that what I am asking, it is the question of companies. What type, what way of adjustment do they apply? It is, yes, you are right. It is always accrual basis. They do not have an option of cash basis at all. So in case of companies, unlike individuals, where we may have a choice of either applying cash basis or accrual basis, at both points, while calculating property income and the tax adjusted trading profit, in case of companies, there is no option available, and we do have only accrual basis of adjustment for calculation purposes, right? So it is always accrual in case of companies. So the name of the company should be mentioned first. It's Flight Path Trading Limited. And then we need to mention the period of account for which they have made their accounts. It is for year ended 31st of March 2025. All right, so the operating loss figure is of 162794 minus 162794, as it's a negative value. So I shall always be mentioning any negative value with the sign of minus. And then whatever the adjustments have already been taken place before, we will have to judge whether they were allowed or disallowed. So see, only the administrative expenses have already been handled while arriving at this figure of 162794. So I need to judge that whether these administrative expenses are allowed or disallowed. So what do you say about depreciation? Is that allowed or disallowed? Yeah, it is like disallowed expenditure. So considering this expense has already been deducted, so we are going to add it back. This amount is of £5,600. Then we have got entertaining UK clients. So clients and suppliers, third parties, entertainment. What do you have to say about it? Is that allowed or disallowed? Yes, third party entertainment is a disallowed expenditure, whether your clients are UK based or overseas based. But I hope that majority of you must have covered the value added tax aspect. There, you must have noticed a differentiation as with overseas VAT customers, the treatment of VAT is different. The VAT paid is allowable, it is recoverable. And for the rest of the clients and suppliers, whether based in UK or maybe if the supplier is based in overseas, the related paid VAT figure for entertainment is not like recoverable. But see, this is the point which is for VAT. And sometimes students start confusing it with uh, trading profit or trading loss adjustment. Here, in case of either profit or loss adjustment, the criteria remains the same. Any type of entertainment being given to third parties shall be taken as disallowed expenditure. So what this value is, this is going to be of £275. And then there comes health and safety fine for 960. Okay, so just let me know, what do you exactly have in your mind regarding health and safety fine? Is that allowed or disallowed? All right, I'm just so happy that majority of you are making the correct statements. Yes, it is disallowed. The all types of fines and penalties are disallowed except for only one fine, which cannot be, which is like not the case over here, as in whensoever it is the parking fine committed by employee but paid by employer. So if company would be making any fine payment for the fine related to the parking issues, but the instance was committed by the employee, and this is like going to be covered up by the employer itself. So this kind of fine is only acceptable, that's allowed, but this is disallowed. There's a question that I am like confused about allowed or disallowed. See, if something is allowed, it should be deducted. But if it is already deducted, then do nothing. Now this is disallowed, means this is something which HMRC doesn't like to get deducted, but has it been deducted or not? Yes, administrative, whole of the administrative expenses have already been deducted. So what do we need to do? We'll have to reverse it. We'll have to add it back because apparently it is deducted before. So when we add it back, the impact will be nullified, right? And then we have cost of purchasing movable partitions for use in the office of worth 10,250. Now, movable partitions. What do you need to say about this thing? See, movable partitions. Okay. Let me just tell you that, for instance, this is the company building and they are creating the outside wall. The walls, stagnant stationary walls, do make up a part of building on which we might think of calculating SPA if the building is newly constructed. But it is not about the stagnant wall. It is not something about the stationary wall. Rather, they are talking about the partition wall. Sometimes what happens is when there is like said to be a large room, then it is like an open plan. In an open plan office, we will be using movable partitions to split one room into smaller units. And whensoever we require, we can like wrap it up and make it and convert it into a single room once again. So this is a movable thing, and this is like serving a purpose. This is performing a certain mechanism. Whensoever anything is involved in conducting a certain mechanism, a phenomena, that this is how what being done by movable partitions. So this would be falling under the definition of plant. Anything which is conducting a certain procedure, anything which is being used for conducting a certain phenomena, that is to be considered as a part of plant or even machinery. And if it is like relevant to plant and machinery, then it should be like eligible for capital allowances purposes, because this is then to be considered as an expense made for non-current asset. Like whatever the cost the company has spent for acquiring movable partitions, this is the amount that they have spent for non-current asset. And see, in case of companies, as what I've told you, that we only apply the accrual basis of adjustment, and under accrual basis, only the revenue expenses are deductible. The capital sort of expenditure, the capital expenses, any expense related to the acquisition of non-current asset is not deductible. So this amount shouldn't have been deducted because it is a capital expense. This is like an expense related to the acquisition of asset. But later on, this plant will qualify for capital allowances, because capital allowances are calculated over tangible plant and machineries, right? So I am going to add it back 10,250. This is the cost of plant. This is the capital cost, so it is not going to be admitted. This is also disallowed, and I have added it back. Yes, you're right. It's capital expenditure, so not allowed. And then annual staff party, all for 32 staff attended. See, whensoever you are throwing parties, which means you are basically entertaining your staff, your employees, then whatsoever the cost you are going to incur, that is totally allowed. That is deductible, right? So if they have entertained their employees, this is an allowed expenditure. This should be deducted. But considering this has already been deducted, so no further requirement, no further adjustment will be required. So what will I do? I'll do nothing. When I'll do nothing, I'll mention it as 0. But does anyone have a confusion about a point they must have read somewhere, that the cost of staff parties should not be crossing the threshold of 150 pound. Does this sort of thing appear in someone's mind? Right? So technically, the company or the employer and their employees. These are the two parties. So whenever the company or a sole trader or a partnership, I mean, any form of employer, when they are providing, facilitating their employees in terms of entertaining, this expense is totally allowed. The employer will be calculating their trading profit and entertainment expenses allowed, because entertainment is not given to third parties, it is being given to their employees. But from employees' point of view, you must have gone through the chapter which is called as employment income under income tax computational rules. In employment income, the scenario of employees was discussed, and according to that, if employee was receiving the staff parties having a cost of more than 150 pound a year, then the total cost provided to them, spent by the employer for the sake of giving them the parties, shall be taxable upon them. So what is the total cost? It is 10,100. And how many staff members are there? 32. I believe that the cost per head, can you please just do the calculation so that I wouldn't be making an estimate? What is like going to be an exact value? 10,100 over 32. What is going to be an average cost of party for an employee? 315.6. So approximately 316 pounds, which is like quite huge. It is more than 150 pounds, which is why every employee, all of these 32 employees, every employee will be including 316 cost of provision of the parties as a part of their taxable benefit while calculating employment income. But here, the question was not about employees. The question was not about those people who were receiving the benefit. Rather, it was about the entity, the employer who was providing this entertainment. And for them, this is an expense, and this expense is allowed, right? And then there are other costs, all allowable. So if they have themselves said it is all allowable, that means this should be deducted. But considering it has already been deducted, so no further action is required. We'll do nothing. And if something is not being done, how would we be showing it as? It will be declared as zero. I mean, no adjustment is to be done. Now, while arriving at the operating loss, only one item being called as administrative expenses that has been dealt, and I have figured out that which ones were like disallowed, and I have reversed them. There is a question, can you please go over the staff party expenses? See, I am just talking about two perspectives. Whensoever the company, the employer, basically employer can be a company, employer can be a self-employed person, employer can be a partnership. So whosoever in a position of conducting a business, whenever they are providing entertainment to their staff, to their employees, whatever the expense they are incurring, that is allowed. I mean, they can deduct it from their trading profit. But when it comes to those who are receiving the benefit, who are getting the entertainment, they need to see that what is the cost per head per year. If the cost of provision of such parties would be crossing the threshold of 150 pounds, which is the case over here, then the whole amount shall be treated as benefit. What will employees do? They will add this benefit into their employment income calculation. But right now, we are not being asked to compute the employment income for an employee. Rather, the question is about the company who is providing the entertainment to their employees, right? You're most welcome. Now, the thing is that we have already treated all the administrative expenses in question, but there are a few other things which is about property, business income, profit on the sale of shares, I mean, capital gains, these two things are not to be included. They would never be included as allowable income while calculating trading profit, right? And fortunately, I have picked up 162794 because this is what examiner said to take a start with this value. Otherwise, if 4320 or 1230, if either of these two items will have already been added while arriving at this figure, then I should have removed it by calling it as disallowed income. But fortunately, it is not already added into this figure. But then there is an interest payable on bank overdraft. See, whensoever the business will be paying interest, we need to see whether it is like trading interest or non-trading interest. If the company will have been taken up any trading loan and they are paying interest on it, this is like said to be a trading expense and it is an allowed expenditure. But if a company would have paid interest on any for any non-trading purposes, then this is going to get deducted against interest income for the company. And see, they say that this is like interest payable on bank overdraft. What is your stance about it? What do you say? By having a bank OD, the overdraft, if you're paying interest on it, shall it be regarded as a non-trading thing, or shall I call it as a trading expense? See, normally what happens is that we have kept money in the bank account and we keep on like paying to the suppliers and receiving money to the customers. But sometimes the balance gets negative and we have to go for the bank overdraft. So yes, it is like a trading matter, and whatsoever the interest we are paying on it, this is said to be a trading expense and this should be deducted. Now just tell me, shall I deduct it? Shall I minus this figure of £2,200? Or I mean, I won't be doing anything. Shall I treat it as zero? What should I do? Yes, this should be deducted. This should be deducted. This is allowed. But as this expense has not already been deducted, I mean, we have taken a start with an operating loss figure of 162794. As this amount has not yet been deducted while arriving at the operating loss figure, so we still have to make a treatment for it. So I am going to deduct this £2,200. Then we have a QCD. See, this QCD has not been treated while arriving at the figure from where we had taken a start. But for instance, if 1048 had been deducted while arriving at this figure, then I would have said that this shouldn't have been deducted because QCDs have got separate treatment. Then I had to reverse it. I had to add it back. But fortunately, this amount has not yet been deducted while arriving at 162794. Otherwise, had it been deducted, then I would have totally made a reversal treatment, right? And then the sale of the shares would mean the sale of non-current asset for which chargeable gain shall be calculated, which would be a part of corporation tax computation, but it has nothing to do with trading loss adjustment. But we do have additional information. Okay, so with additional information, it is said that on 1st of April 24, the tax written down value of plant and machinery pool was 152,800. Then they have got 2 delivery vans, then they got a car, and then the previous results are given as well, where the situation seems to be like quite good because it is like profitable in the previous 6 months accounting period and then a year before. But do not forget that we have got the Flight Path Limited had got a partition wall as well, right? So what do we have to calculate with respect to this additional information? This is basically the capital allowances that we need to calculate. Okay, so considering a lot of information is given with respect to the plant and machinery, which is why I shall be using the information for the sake of calculating capital allowances by making a proper format. There is a question that can you explain on QCD? QCD is a qualifying charitable donation this would be like explicitly mentioned in the question that if a company is making a qualifying charitable donation, then it should be deducted against the total overall corporation tax pro forma. It is going to get deducted against overall income, total profit of the company, and not specifically against the trading profit. For trading profit, it is disallowed, but from overall income, it could be allowed. Okay, so what I was like telling you that we will be calculating capital allowances and I'm going to do the working. I'm going down as what I told you people before in last day's session, that vertically we will be taking a start with any of the working, so that when eventually we are done with a certain question, examiner will be finding the main format in the start and then workings in the end. So this is about working one, and I'm going to calculate capital allowances, and capital allowances for the companies are always calculated according to an accounting period, and they have made accounts for year ended 31st of March 2025. So from April 24 to March 25, the calculation is required. And of course, we have got few new items. So definitely we are going to make a column of annual investment allowance. Now, we have got a car as well, but its carbon dioxide emission is existing. Otherwise, if the company would have acquired a zero carbon dioxide emission based sort of vehicle, and if it were a new car, then we must have calculated first year allowance on it, but no such zero carbon dioxide emission based car, which is a new one, has been acquired in this scenario. So I think there is no need to make a column for FIA, and then I'll be making a column for general pool, and then no asset with personal use column shall ever be made. It is like going to be never made in case of companies, because in case of companies, there is no sole trader existing, and there can never be any personal use made by the self-employed person, which is why asset with personal use is not existing in case of companies. By the way, in case of companies, we do have a special ed pool as well as short life asset, but no such information is given in the question. So I will not be making unnecessary columns. Now, what the thing is that first of all, I shall be picking up WDV brought forward. What the WDV brought forward is, it is of 152,800. Then we move towards additions. And first of all, I shall pick up the addition which is not qualifying for AIA or FIA. And in this capacity, car would fall. So we've got a car whose cost is 26,100 pounds, and it has got a carbon dioxide emission of 15 grams. But it says that 30% of this car is being used for private purposes by the managing director of Flightpath Limited. But the thing is, whether it's the case of company or any self-employed person, if an employee is making up a private use of anything, then for capital allowance purposes, it is never regarded as an asset with personal use. Rather, it is always treated as something being used 100% for business purposes. So employee personal use doesn't create a difference for capital allowance purposes. It is to be considered as if something is being used for business purpose completely. So what the cost of car is 26,100 and having a carbon dioxide emission of 15 grams, I suggest that it should be treated as a part of general pool where WDA at the rate of 18% will be applied later on. Its cost is 26100. And then the first edition has been taken up. It was a car. It was not qualifying for AIA. And then I will be like going for those editions which are qualifying for AIA. We have got vans, and we have got partition walls as well. Now, what the cost of the van is, it is said in the question that Flightpath Trading Limited has got two delivery vans worth 34,220 600 was basically paid as a trade-in allowance in respect of the two old vans. Okay. Now just tell me that what is the cost of the van? They have got one van, but they actually traded in this van in response to two old vans for which uh, there is a trade-in value of £2,600. What do you suggest that what has to be the cost for the new van? There is only one van, by the way, they have acquired, but replaced two vans in order to acquire this only van. But what has to be the overall cost for this van? Yes, you're right. It is 34,200 and 2,600. That's 36,800 because the two vans were traded in for £2,600 and they had to pay additionally 34,200. So altogether, it had cost them £36,800. So these two values are to be added into each other, 34,200 and 2,600. So actually the old vans were having a value of 2,600. They gave the old vans and additionally they paid 34,200 in cash. So altogether 36,800 is meant to be the cost, while partitions walls were also acquired as well. And partition walls. See, here they have mentioned the cost. It is 10,250. 10,250. So what is like going to be the overall cost? What's going to be the overall cost of these new assets? 3,4,200 plus 2,600 plus 10,250. So this would be of £47,050, and the whole cost is going to be covered against AIA, which is annual investment allowance. So 4,7,050. And then what is going to be left behind? Nothing would be left behind, and nothing will then be taken to general pool. Now, has there been any disposal in the current period? I mean, in the period for year ended 31st March 25, there is like no such disposal. So whatever the value for general pool is, I shall be applying WDA at the rate of 18%. Okay, so the overall value for the general pool is 178,900. On this value, WDA at the rate of 18% will be charged, and that is of £32,202. Now we need to see that what is going to be left behind. What is the WDV carried forward? And this is how the amount which is going to be left behind. This is of 146,698. But why did I put a sign of minus before it? Because this is an allowance. This should be deducted in order to see that how much value is going to be left behind. Okay, so let's see that what is going to fall in the column of total. This is 47050 and 32202. So what's going to be the total allowances figure? This would be of 79252, right? So this is like said to be the answer for capital allowance purposes. Do you all agree to this thing? Is everything clear till now? Or there is something that we need to consider, because there is something which we had to consider, but I deliberately skipped that point. I just really wanted to know that how would you, okay, just telling you one thing. Let me just give you a hint that there is the mentioning of disposal of old vans as well, but nobody had figured it out. When I said that there is no disposal, nobody said that there is a disposal in the current period. See, on 9th August, which is like falling in this accounting period, they had got one delivery van by giving away two delivery vans. So don't you think that two delivery vans are disposed of in the current accounting period? What do you say? Right? So this is like the disposal of the vans. This should be treated. But the thing is that whenever the disposal is going to get deducted, we need to see that from where this was originally added. Of course, when the delivery vans were acquired, they must have qualified for AIA, and later on their value is to be deducted from the place from where they were originally added, and that must be the general pool, because after AIA the leftover balances were meant to be taken to the general pool, and it is usually the lower of cost and disposal proceed. Though the disposal value for the two vans is of 2,600 pounds, I believe that this is the lower one as compared to their cost. The cost of the old vans is not given. So the leftover balance is of 1,676,300, for which when we apply 18%, this turns out to be 31734. Let me just do the calculation again, but this is like going to be the same one, because we had applied the formula, and when the values got changed, this got changed automatically. And what is like going to be the WDV carried forward? This would be like 176,300 less the allowances value. That's 144,566. Okay, so 47050 is the value taken from AIA, and 31734 is the value we've taken up from general pool, and we did not apply the concept of asset with personal use, because asset with personal use is the concept which can happen in case of self-employed persons, where a self-employed person himself will be making a personal use of any asset. But in case of companies, this can never be the case. So this would be like 47050 and 31734. So this would be like 78784. This is appearing in the cell E33. And how do we need to treat this capital allowances figure? The capital allowances are deductible as this is an allowed expenditure. So instead of typing it down, what would I do is equal to, whenever I am going to take a start of any cell with a sign of is equal to, either the calculation will start or I may copy paste the information. So I'm just going to mention the cell number minus E33. E33 is basically the cell number in which the answer for capital allowance is existing. But why did I put a sign of minus before it? Because it is deductible. It's an allowable expenditure. So it becomes 78784. Now I need to see that what is going to be an adjusted figure after all these adjustments have been taken into account. So this would be like 226693. This is like said to be the tax adjusted. Of course, this is like once again in a negative value, so I shall call it as a tax adjusted trading loss. So here is our answer. Is this thing clear? Is this thing clear to each and every one of you? There was a concern I didn't understand. 10 to 50. 10 to 50 is basically about partition walls, and partition walls are something which are not stationary. They are not fixed. They can be moved. So they are like conducting a phenomena. They are conducting a certain process. And if something could be involved by conducting a certain process, that should be termed as plant and machinery on which capital allowances should be deducted. This is like unlike stationary walls, I mean the surrounding walls which stay intact at the same point. It does serve as a purpose of surrounding walls, which is why it would always be treated as a part of building on which SBA, the structures and building allowance, should be calculated. But on partition walls specifically, it's the implication of capital allowances to be applied. There was previously one question asked about it as well. I hope you have got the answer as well, that the party, why did not the partition walls qualify for SPA? Because this is like movable in nature and it is conducting a process. Had it been a stationary wall, which is like could be considered as a surrounded wall. So anything which is being surrounded by something would fall under the category of SPA. There's a question, how about QCD? It needs to be added back. Unfortunately, we are not going to add it back because it has not been deducted while arriving at the figure of 162,794. I mean, the figure from where I had already started my adjustment. But for instance, if QCD was written somewhere else in administrative expenses, that QCD was deducted before arriving at 162,794, then I would have surely reversed it. I should have like added it back. But here, considering this expense was not already treated, so I did nothing. All right, so let's move further. We have got another requirement of the question of worth 5 marks, and to our surprise, we have been given with a pre formatted type of thing, so we will not have to spend a lot of time in making the formats ourselves. So it's like what the requirement of the question is. It says that assume that Flight Path Trading Limited claim relief for its trading loss as early as possible. Calculate the company's taxable total profit for the year ended 30th September 23, the 6 months period ended 31st March 24, and the year ended 31st March 25. So whensoever the question is about adjustment of trading losses, we will always have to make the column. Now they are asking about 3 accounting period, the year ended 30th September 2003, for which the information is given over here. Just reconcile it if it is correct. In this, the trading profit figure is of 52230. The property income, I mean rental income, is of 3100. Then they have a chargeable gains of 1222, and there is no interest income. So that's perfectly fine. This is how we will come to know what the total income for the company is. And against the total income, which we basically precisely call as total profit. Against the total profit, we will be making an adjustment of our trading losses, whether the trading loss is to be adjusted in the current accounting period or if it is carried back or carried forward. And once the loss is adjusted, then we will make an adjustment of QCD, right? Okay, so first of all, I shall be completing the format. Then the accounts were made for 6 months ended 31st March 24, for which the trading profit is of 16,000. You can reconcile it with the information given. 1422 is the trade property business income, and the chargeable gains are 0. I may take the total simultaneously. The total of the year ended 30th September 23 is of 56,552. The total for 6 months ended 31st March 24 will be of 17,442. And then for the year ended 31st March 25, I mean the question that we are dealing with, the scenario in question, it is having a trading loss. And what has been the trading loss? We had calculated it in the previous requirement. Let me just tell you that what the value for trading loss is. This is something which we did calculate. The adjusted loss value is of 226,693 pounds, right? 226,693. All right. And then, do we have any property income in the current accounting period? And the answer is yes. If you just have a look at the question, in the format, you will find the property income. Though, if in case in the notes, you will find the information, additional information about the property income, then first of all, you have to uh, clarify that what exactly the figure for property income need to be taken into account, what exactly the accurate figure of property income the companies will have to take into account. But considering there is no further information related to property income given, so I believe that whatever the value being calculated over here, that must be perfect. Okay, so what the value for trading profit is, it is of, sorry, the property business income is, it is of 4320. Then we have profit from the sale of shares, though they have calculated, they have given us the value of 1240, but see, there we can find an additional note. So I just need to make it clear whether the value of 1240 is correct or not. It says that the chargeable gain on the disposal of shares is 1240, the same as the profit on the sale of shares. So they basically want to say that the gain which HMRC would like to compute is 1240, and this is exactly the same value as what computed by the accountants, and there is no indexation allowance available. Otherwise, there would definitely be a difference in between the chargeable gains figure and the simple profit on the disposal of shares as what calculated by accountants will have been. And why there is no indexation allowance? Of course, there must be a purchase of the shares happened after 31st December 17, the date afterwards, after which the concept of indexation allowance got frozen. So 1240. This is like said to be our chargeable gain, and that's how I may easily come to know what my total profit for the current accounting period is. This is of 5560 pounds. Let me just highlight it. It is now the total profit, and against the total profit we will be making an adjustment. They said that company would like to carry back their losses, but see, it is not possible to straight away carry back the losses. Rather, in the current accounting period, first of all, the company shall have to make an adjustment, and then the leftover loss could be carried back. This is very much opposite to individuals, where individuals can either choose current tax year or the carryback option, or they may even go for both. But in case of companies, it is mandatory that one has to make an adjustment in the current period and then they can go back. In fact, the requirement of the question is to adjust trading loss as early as possible. So for as soonest as possible, we will be making an adjustment in the current period and then carry it back. Okay, so the loss figure was, let me just make a loss memorandum simultaneously. It was of minus 226693. This is what we had calculated as per requirement A. Okay, so what the current period is, current period total profit is 5560. Against 5560, of course, we can make the maximum adjustment of 5560. And as a result of doing this thing, how much of the profit will have been left behind? The total profit left behind will be 0. And what about QCD? The QCD will no longer be adjusted. It will be wasted. As you could see that here in question, there was a QCD of 1048. But unfortunately, when in current period, the losses are to be adjusted, the maximum possible adjustment shall have to be made, and it may lead to the wastage of QCD. And then after dealing with QCD, we'll be able to come to know what the taxable total profit will be. Of course, the taxable total profit in this case will be 0. 5560 is the amount that has to be adjusted in the current period. And then how much of the loss is now left? The remaining loss figure is of, out of 226693, 5560 has been adjusted. So the leftover loss figure is of 221133, right? And this loss can now be carried back. Can you just tell me that for how long we can carry back our losses? I have got two exhaustive statements. What if I missed the calculation of trading loss, but I got the correct steps of loss relief? Will I be given full marks? Yes, for all the steps which you have performed correctly. Though the value of the loss you are picking up is not correct at all, you will still be given like full marks for this part of the question. And of course, in the previous part where actually you had made a mistake which had led to the wrong figure of trading losses, only at that point the marks would have been deducted. It is not going to ruin the whole situation. I mean, you will not be losing all the marks. It said that for trading loss, current year and carryback option, the loss is very big, which cannot be nullified after carrying back. Can we save the QCD? No. Either whether we are making an adjustment in the current accounting period or we are going to carry it back, the maximum adjustment will have to be made, and we do not have an option of saving our QCD. This is like called as partial saving, partial claiming of losses, which is not applicable in case of current period and carryback options. But yes, it can be done when we will be carrying forward our losses. Do you now understand this thing, that why did they waste the whole of the QCD? Okay, so you people have given this correct answer that it has now to be carried back to 12 months. But previously, the company has made accounts for 6 months, but that's okay. We'll be using these 6 months first. Against 17422, I shall be making the maximum adjustment, which is of 17422. And then the loss, the remaining profit will be zero. And once again, if there has been any QCD in the previous period, if there will be, then it is going to be totally wasted. But there is no QCD at all. Otherwise, there had been like no adjustment in this case. And that's how the taxable total profit will become zero as well. Now, 17422. 17422, we have carried back our losses, and we have made adjustment against 6 months ended 31st of March 2024. And afterwards, how much of the loss is still pending? It is going to be of 203,711. So this is the amount of loss which is like still left behind. And still, we may carry back our losses further for the previous 6 months. Yes, you're right. Do we need to apportion the loss for 6 months? Now, in this case, okay, so loss figure is not going to be apportioned for 6 months, but now the apportionment is required where the adjustment against a year-based result will be made, as we will be making an adjustment against total profit before dealing QCD. So it is the total profit which would require an apportionment where the total profit is not available for adjustment purposes. So in the last 6 months, we had made the maximum adjustment. And then the period before that, as it is for full 12 months, now we cannot make use of these 12 months completely. So I'll have to portion this thing in order to see that how much of the total profit is equivalent to 6 months against which loss could be adjusted. See, this value is existing in the cell B8. So if this value is like meant to be for 12 months, I need to see that how much total profit would relate to 6 months. And this is like equivalent to 28276. So the taxable total profit, in fact, precisely the total profit for 6 months has been apportioned, and it is like equivalent to 28276. Only this value is available for adjustment purposes, but we still have a lot of loss. It's a huge loss, but okay, 28276 could at least be adjusted. Two 8276, right? So after making an adjustment of this value, How much of the profit will still be left behind? Of course, we will be having the remaining 6 months profit figure, which is of 28276, for which now we still have an option to make an adjustment of QCD at least. So the QCD figure is of £800, and that's how the leftover figure will turn out to be 27476. So I just want to say that, first of all, in the current period, the loss had been adjusted. Against this, I have written current period loss. Then loss was taken behind for 6 months, and then it got adjusted against further 6 months, though the accounts were made for 12 months, but we had to apportion the results in order to see that how much of the profit figure will be found equivalent to 6 months against which loss could be adjusted. And this is how, after adjusting QCD, here we have the taxable total profit. And this is something your examiner had asked you to calculate taxable total profit for all the years in question, for all the accounting periods in question. And let me complete the loss memorandum. When we had taken back the loss for further 6 months, the loss of 28276 got adjusted, and still we do have a loss pending in this case. How much of the loss is still here? This is of 175435. This is the amount of loss which is like still existing. You may call it as unrelieved loss because it is not like yet to be relieved, or you may simply call it as remaining loss. But what should we do with this loss? This loss will definitely be carried forward, but considering right now we do not have any information related to the future accounting period, which is why it is not possible for me to show that how the adjustment will have to be made. But if the data would have been given, then this loss will be carried forward and it would have been adjusted against the total profit before QCD of the future accounting period. And see, even in the future period, uh, we will still we will at least be having an option of saving our QCD. I mean, the partial adjustment of losses can be made. We could make an adjustment of loss to an extent so that we must have been left behind a certain figure against which QCD would get adjusted completely and it will not go wasted. So this is how the things are to be handled. Is this thing clear? There's a question, can we carry back or carry forward our QCD? No, this is not possible. Though there is another concept which is not a part of taxation syllabus, that QCD can be surrendered to group members. The way you have gone through the concept of group relief group, the 75 percentage structure. But this is something which I should not go into the detail because this is something which is not a part of your TX syllabus. But it is like never possible to either carry back or carry forward our QCD. Is this thing clear? All right, so we still have a 3 marks part for the same question. It says that discuss. So focus on the verb. You need to make a discussion, an explanation, and it is of worth 3 marks. So we will be producing 3 valid points. All the possible options for offsetting the trading loss available to Flight Path Trading Limited and the potential advantage of a claim for loss relief against a later period. So what are the possible options? See, we are not going to do any calculations, right? And they have specifically said that don't discuss the group relief. I mean, don't discuss that if they have got a subsidiary with which they have, they're having a relation of 75 percentage, though the loss could be relieved that way, but this needs not to be discussed over here. See, we have current period adjustment, we can carry back our losses, and we can carry forward our losses. These are the simplest things. These are the simplest options which we have for the sake of adjustment of losses. And for a later period, I mean, for a future period, if the loss is going to be adjusted, what could be the possible advantage? This is something which I have just told you, that in case of carrying forward the losses, though the loss has to be adjusted against the total profit before QCD, but here we may make partial adjustment of losses. I mean, we may save our QCD from getting wasted. So I am just going to write the points. The loss of flight path trading limited can be adjusted in the current accounting period against total profits before QCD. This is the first point. The excess loss, because in case of companies, you cannot straight away carry back your losses. The excess loss can be carried back for 12 months against total profits before QCD while trading losses can be carried forward, though it is also adjusted against total profit before QCD, but the company has an advantage of making partial claims and thus saving qualifying charitable donations. So this is how I have made 3 valid points for the sake of securing 3 marks. Right? Is this thing clear to each and every one of you? Current year relief. Okay. How is it saving QCD? For instance, if we have a loss figure of £100,000 and in the future, the total profit figure is of £40,000 and we do have a QCD as well, then we'll be making an adjustment of loss to such an extent that QCD won't get wasted. For instance, if our loss, as what I said, is of £100,000, though in the current period and in the previous period, we'll have to make maximum adjustment. Let's say when it comes to future accounting period, our total profit is of £40,000 and we do have a QCD of £5,000. So apparently against 40,000, one would be thinking that 40,000 needs to be adjusted, but here I shall be making an adjustment of 35,000. I did not make full claim, rather I could make a partial claim in case of future results. And that's how some of the profit will be left behind. And what advantage will I get? I will be able to make an adjustment of QCD completely. This is how the QCD couldn't be wasted. Right? Okay, now students, as what I told you people, that whensoever you'll be going through the practice thing, the revision should be done through your notes. For students of VIFHE, we have provided you with e-notes. They are comprehensive. It does have each and everything. So you'll have to revise everything from these notes. But if you would like to revise the things through Study Hub, that's perfect as well. But don't open Kaplan textbook. It is so huge. If you just start reading the book, the reading will consume almost all of the time. You will not have been left with any time for practice purposes, though in case of taxation, the practice is the key to pass the exam. And see, you shall definitely be spending 6 to 8 hours on daily basis. That's something I'm talking about 10 days before your exam for preparing a certain subject. And for instance, if you have allocated 6 hours for revision purposes, then for 4.5 hours, you'll be revising the concepts, and for 1.5 hour, you'll be doing the practice. And for the sake of practice, let me just tell you that all of the questions which are found in Kaplan revision kit with respect to section A and B, they should be done completely. Or if you would like to use Study Hub for practice purposes, then that's perfectly fine. All the Study Hub questions related to OT and OT cases, I mean, for section A and B should be done completely. But when it comes to section C, selective practice could be done, though you cannot totally avoid it. You will not have to put a less stress on it, but uh, just want to say that if there are 40 questions there in the kit, you may practice 20 questions out of them. But I have already shared the list of important questions with the admin of VIFHE. They must have reshared it today, but if they haven't, then I will definitely be resharing it with you people shortly after the session would come to an end, right? There's a question, can I do constructor response question from Kaplan kit? Definitely. I am primarily in a favor of doing Kaplan revision kit for doing section A, B, and C. But if you like doing Study Hub, then that's perfectly fine. Either way, you will have to complete the questions related to section A and section B. Either you choose Kaplan or the Study Hub. But when it comes to constructor response questions, then whether you'll be using Kaplan or you'll be using Study Hub, you may do selective practice of those questions. Though still I'm in a favor of Kaplan revision kit, for which I have shared the list of important section C questions as well. But for the sake of revising your concepts, I would never ever say to open Kaplan study text. It's huge. It does have elaborated statements. It does consume a lot of time. So for the sake of revising the concepts, either the notes that we have provided you should be used, or you may use the Study Hub material. As a lot of students have already joined our revision batch, but to those who are not yet a part of our revision batch, let me just tell you that we are providing the pre-recorded material for majority of the topics which are frequently examined. The pre-recorded practice material is being provided, while the recently conducted live sessions recording will be provided as well. And currently we are handling this game changer webinar session, which was based on 2 days. And then I shall be giving a grand revision. I'll be conducting a grand revision session for the students, after which 2 mock exams will be given to the students. One mock strip will be checked, the detailed feedback will be given, and I will be conducting a mock debrief session as well, while the second mock will be given as a complimentary mock for which the solutions will be provided. Of course, once you become a part of our revision batch, the WhatsApp tutor by the student will definitely be given to you people, and e-notes and the PDF of the slides and everything will be also provided. The duration of the grand revision is normally of 2 hours, but we may take it to 3 hours. Now I am going to take you to the specimen exam with the help of which we'll be practicing the sorry, uh, the practice of section A and section B questions, right? So let me first close this tab. So this is the specimen exam available on the Study Hub portal. And I'm just going to open it up in order to discuss section A and section B questions with you people. We'll try to cover all of the section A questions, but if in case we couldn't become able to do section B questions completely, then its recording will definitely be provided to all of you. And for those students who are not yet a part of our session, the recording will be available on YouTube. Okay, so let's have a look at section A. Section A will be having 15 OTs. Every OT will be of 2 marks, so it will be of worth 30 marks in total. See, in your exam, you will be having an option of using this calculator, but using this calculator is a bit tough, right? But you still have an option of doing this thing, and you have a scratch pad for doing all the related workings. But in majority of the exam centers, if you're not going to be taking remote exam, then just listen to this thing. If you go to an exam center where so many students are there who are taking up their exam, they are usually given with an external loose sheet on which necessary workings could be done, and you are allowed to use your calculator as well. And in that case, examiner will never be interested that how you have performed your calculation, what values you have written as a part of your working. Even if you are using the scratch pad, whatever the working you are going to do, examiner is not going to have a look at it. It is, these questions are going to be auto marked. So whatever the answer you will be given, you will be like giving, either it's correct or not, that is something which would matter. If it is a correct answer, you will be getting 2 marks. If it is incorrect, you will not be getting anything. There is no concept of negative marking, right? So be brave. There is no need to make formats. There is no need to go in a very proper structured channel for the sake of like doing the computation. All you need to do is just to do the calculation abruptly. Try doing it correctly so that you will be able to secure the proper marks. And see, whosoever would be able to deal with section A and section B questions perfectly in their exam, their chances of passing the paper will be increased. Why? Because obviously 60 marks, 60 out of 100 marks of your exam is basically dependent on section A and section B question. So if you'll be like focusing hard over these two areas, you shall definitely be having brighter chances to pass your exam, right? So let's have a look at the question. Meanwhile, I'm going to open. Okay, let me just show you this thing as well. See, in your exam, on the left bottom, you will find this option of help/tax tables, where you are given a certain help that how the constructor response questions are to be used, which shortkeys you can use. So this is like going to be an informative thing. But the point is that whatsoever the shortkeys you are supposed to apply, you need to learn it before like, I mean, it would be like consuming a lot of time if you just keep on like opening this tab again and again. But here are the exam instructions which are given in the start of the exam. But if in case you have missed and you really need to know what the examiner instruction is, maybe you are interested in this thing, then you may reopen it. Otherwise, there is no need to open this tab. But yes, this tax table could be a helpful tab. Here you can find the important piece of information, the rules which we usually use for solving a certain question. Okay, so this was something stopped working, which is why I have stopped using this application, and I'm just going to open my own tax allowances and table. It is the same that will be given to you people in your exam. the one which I showed you right now. Kindly read the question. And then I'll start doing the computation. All right. So you must have all gone through these two statements. It says that William is a self-employed and his tax adjusted trading profit for the year ended 5th April 25 is of 82,700 pounds. During the year ended 24-25, William contributed 5,400 pounds gross into personal pension scheme. What is the amount of class 4 NIC? First of all, students, whether it's a sole trader or a partner in a partnership, they will have to first adjust their profit. The tax adjusted trading profit is calculated, but they might have made accounts according to their own choice, maybe from January to December, July to June. So whatever the period they have set, first you'll have to connect the period to the tax year, for which we apply a very basic rule that, for instance, if someone has made accounts from January 24 to December 24, 9 months from this period will be falling in the tax year 24-25, while 3 months will be taken from the accounting period ranging from January 25 to December 25. So from the accounting period, we'll have to extract that how many months will be falling in a certain tax year. And whatsoever the profit meant to be for a certain tax year, when we have figured out that how much of the profit do we need to associate with a certain tax year, then on that profit, individual will be paying income taxes, and simultaneously on the same profit figure, one will have to pay NIC as well. And self-employed person shall be paying class 4 NIC. Okay. So they have said that their profit for year ended 5th April. Luckily, they have made accounts from 6th to 5th April, so they need not to pay more like stress towards this thing. The whole of the profit of 82,700 shall be falling in the tax year 24-25, and pension has nothing to do with this scheme. So we shall have to see that what is going to be the class 4 NIC. The class 4 NIC rates will be given to you people in your exam, the one which I opened, but as it was not working, it was not being scrolled up and down, which is why I closed it and opened it on this PDF. Okay, so class 4 NIC says that for the first 12570, there is going to be no NIC. Then from 12571 till 50,070, this makes up 37,700 pounds, on which 6% of the NIC shall be imposed. And on the earnings for a self-employed person, the earning would mean their trading profit. On the excess earnings, 2% of NIC shall have to be applied. Now, what their earning is, it is of 8 to 700. On first 12570, there is going to be no NIC. And from 12571 till 50,000 to 70, I mean, on 37,700, we shall be applying the rate of 6%, right? And what is going to be, what this will be, can you please calculate it? Okay, so 2262. Thank you. And on the remaining earnings, as 82,700 is the overall earning, we have considered 12570 and 37,700. I mean, altogether, after 50,000 to 70, the excess of the earnings will be charged at the rate of 2%. Can you please tell me what the 2% of this excessive amount will be? This is going to be of 648.6, so I will take it as 649. So what's going to be the grand total? What's going to be the grand total? 2262 and 649. 2911. All right. So 2911. Are you sure? Just recheck it. You're also getting 2911. Just recheck the whole of the calculation for once. See, this is basically the issue that we face while doing any question on the study hub, which is why, yeah, the personal pension is of 5,400, but personal pension has nothing to do with this calculation, right? Sometimes what happens is that they pick up some random past paper, and without even changing their answers, they just upload it. So though they are claiming on the study hub that this whole question, this whole exam has been properly adjusted according to the latest Finance Act, but it seems it is not, because otherwise the option will be existing. Personal pension is basically used for the sake of determining ANI, while we have to decide the amount of personal allowance to get deducted. And the personal pension would be added to the basic rate band. Kaplan has the same question. It has 2.11. Yes, that's basically the issue. Let me just tell you one thing. Okay, so as I have already opened it, so we'll just keep on like doing the calculations whether we find the options or not. But this is something which I believe ACCA should seriously take into account, because see, when I log, I did show it to you people last time as well, that we have very few attempts available which could be done on the study portal. See how many exams are available for taxation. This is like 11, out of which I am doing this specimen exam, for which they are declaring that this is according to the latest Finance Act. Well, they haven't changed the option. This is like not a nice thing. So 2911 is the correct answer. But see this one, the September and December held in 24. Just tell you one thing. This is not to be done by you people, because these are according to the old Finance Act. Then June 24 syllabus, though they are claiming that this is according to 24-25, but I have checked it. This is also according to the previous Finance Act. They haven't made any proper changes. Then for September 2003, it's very old attempt. So is the case with June 2023, September, December 22. Then they have practice set. Yes, these two practice sets could be done. They are claiming that this is according to FA 24. This blank workspace is like nothing. And June 25 is something for which only constructor response questions were available, which we did discuss. And this is something which is like such a nice thing, but it should not be done right now. It should be left for the proper practice thing. So out of this, if they are claiming that this is the specimen paper specifically according to Finance Act 24, they did make changes to the apparent statement. I mean, they have changed the year 24, 25, but then the examiner forgot to make changes in the option. But that's perfectly fine. I hope you are professional people. You do understand their problem. So what the answer is, it is 2911, which is why I say that one should use Kaplan revision kit. The question is, can you briefly explain how we are doing 80 to 700 less 50,700? See, on first 12,570, there has been no NIC. Then on next 37,700, there is NIC of 6%. If you just add up these two both, you will get that you have already considered 50,270, and the amount which is found in excess of this thing, then we apply the rate of 2%. No, this is not the person allowance. They have got their own limits of first 1 to 570, which is like coinciding with the personal allowance, but this is not this is not being deducted under the capacity of a personal allowance. Okay. Let's quickly move to the second question. I hope there's like going to be no issue in this because it's a descriptive one. You are a trainee chartered certified accountant and your firm has a client who has refused to disclose a chargeable gain. So someone has disposed of an asset, made a gain, and they are not willing to disclose this thing to HMRC. So from ethical viewpoint, which two of the following actions could be expected from your firm? So what is your stance? You have got four options, A, B, C, and D, and you will have to click the two correct options. What has to be this according to you? It's first and second, because whensoever your client refuses to make a disclosure of anything which is otherwise required, then you need to insist your client to make a disclosure, or you may ask your client to authorize you, the firm, to make a disclosure on their behalf, because without their permission, you cannot make any disclosures to HMRC on their behalf. And otherwise, if they don't listen to it, then just stop giving tax services, the advisory services to these clients, and just mention HMRC that you have stopped working for that client. But you're not supposed to mention the reason of leaving the client, and you're not going to even threat the client that you will be making a disclosure in front of HMRC. This is like not ethical. But yes, if the matter is serious, it could be reported under the money laundering regulations to the person who is dealing with such affairs in the company. So it is the first one, advising the client to make disclosure and reporting it under money laundering regulations. And the third possible thing, the third possible step would be that you would stop working for the client, but that's not there in the question, and you was to only click on two options. But you're not going to inform HMRC about the non-disclosure, and you're not going to even making threats of reporting such incident to HMRC, right? Why not fourth? The C, you're not in a state to warn, threat your client. You can either insist, you can either advise politely to make a disclosure, or you just simply not going to provide your services, but you can't be on a very offensive side. And you were working for the client, which is why under confidentiality perspectives, the attribute of the tax advisor, one of the attributes is confidentiality. To make the things confidential about your client, it needs not to be disclosed in front of HMRC unless and until client would permit you. So if he's not going to do this thing, you will just stop acting on the behalf of that client. But under ethical perspective, you're not going to tip off such things to HMRC. And obviously, once you stop working for the client, HMRC would get a little alert that there could be some suspicious act behind it. Yes, I can stop working for the client without mentioning the reason. But obviously, once you stop working for the client, HMRC uh, might definitely suspect that there is something fishy behind this issue. Yes, you're not going to do this unless you've got a specific consent from the client. Okay, so there's a third OT which says that Martin is self-employed, and for the year ended 5th April 25, again, this self-employed person has made accounts from 6th to 5th April, though they are not supposed to follow exactly the tax year. They may make accounts from January to December or July to June. And once they have made their accounts and you have adjusted their profit, then you can see that how many months from one accounting period shall be falling in a tax year, and how many months from the other accounting period shall be incorporated in a certain tax year. But it's perfectly fine if they have made their accounts for 5th April, ending on 5th April 25. Their profit is 109,400. During the tax year, he made a gifted donation of 800 gross to a national charity. What amount of personal allowance will Martin be entitled for the tax year 24-25? So let's take a minute and quickly let me know that what your answer has to be. I've got two answers, 7870 and 8270, another answer with 8270. Okay, so let me do it as well. First of all, I need to figure out that what the ANI of this person is. Adjusted net income is going to be determined by taking into account the total of the net income. They have only the trading profit and no other income. So their net income is 109,400. And then if they have made any gross personal pension contribution, it should be deducted, but that's not the case over here. And if there is any gift aid donation gross, then this should be deducted as well. And they have given us the gross amount of gifted donation, which is of £800. Afterwards, I need to see that what is going to be an ANI. This must be of 108,600. And if your ANI is going to be of greater than £100,000, then you need to figure out the excess ANI. It is of 8,600, and half of this excessive amount, you're going to either divide it over 2 or take 50% of it. Half of this figure is equal to £4,300. This is the figure by which your personal allowance shall be reduced. So what your exactly the personal allowance figure will be, it is of 12570, against which 4,300 should be deducted, and that's how the revised figure for personal allowance will be. The revised figure for personal allowance will be 8,270 pounds. Right? And whenever you are going to answer any blank, you will not be mentioning any comma, full stop, slash, dash. Just mention the numbers. 8,270. All right? While dealing with section A and B, with numbers, you will not be putting any extra character of comma, dash, slash. You are not. Even if I have tried to put a comma, they have said that this is not going to be the expected thing to be done over here. But you can put full stop, comma, slash while handling section C. Okay, so now we have MOT4. It says that for the year ended 31st March 25, Hello Limited made a trading loss of £180,000. Hello Limited has owned 100% of the ordinary share capital of Shello Limited since it began trading on 1st July 24. For the year to 30th June, Shallow Limited will make a trading loss of 224,000. Neither company has any other taxable profits or allowable losses. What is the maximum amount of group relief which Shallow Limited can claim from Hollow Limited in respect of the trading loss of £180,000 for the year ended 31st March 25? So once again, considering these two companies are connected to each other via 100% shareholding and having a shareholding of at least 75% at each level in the group, and indirect shareholding for indirectly controlled companies, if that's of 75% or more, then that's the situation where trading losses, excess property business losses, and excess QCD could be surrendered. But here they're just talking about the trading losses. These two companies, though they are connected in a very strong way, having 100% shareholding of Hello Limited and Shallow Limited, but their accounting periods are quite different. So you just need to know that how much of the loss could be surrendered against the year ended 31st March 2025. So could someone figure it out? Just take a minute and tell me that what has to be the answer. Okay, I've just got one answer of £168,000. I just want you people to do the calculation as well. 168,000, 45,000. Okay, shall I start or should I give you some more time? 135,000, another answer. 135,000. Okay, so I'm just going to take a start. Another 135,000 answers there in front of me. Right. So just keep one thing in mind that Hello Limited is having a shareholding of 100% in Shallow Limited. And if, as they are being directly controlled, so direct control, if it is of 75% or more, and there is no indirect controlling companies could be seen over here. But if indirectly controlled companies have got a shareholding of at least 75% or more, then in such cases, losses could be surrendered. So Halo Limited has made accounts for the year ended 31st March 25. I mean, April 24 to March 25. And according to the question, they have made a trading loss of 180,000 pounds. On the other hand, Shallow Limited began trading on 1st of July 2024, and they have made accounts till 30th of June 2026. And if Hallow will like to give their loss to Shallow Limited, if they would like to surrender their losses, then the company who is going to accept the loss shall have to make an adjustment against taxable total profit. I mean, the total profit after QCD. So in case of Shallow Limited, they have told us that the profit figure is of 224,000 pounds. There is no property income, no interest, chargeable gains. So this is like going to be the total profit, and there is no QCD even given in the question. So this is like said to be their taxable total profit. But the point is that their periods are not exactly coterminous. They are not same. They are not they are not coinciding with each other. So I just need to see that whatever the months of one company are coinciding with the other company, the loss equivalent to that period could be surrendered. So out of these two figures, if 180,000 pound is said to be a figure for 12 months, could you see that from July to March, from July to March, this is basically the period which is found to be same amongst these two companies. So only 6 months loss could be surrendered. 224,000 into 6 by 12, that is this the 9 months? July to March. Yes, July to March is about 9 months, correct? So 9 months apportionment will be required. July to March, it's making 9 months. So what is going to be equivalent to 9 months of 180,000 pound? What is basically equivalent to 180,000 into 9 by 12? This is going to be equivalent to 135,000 pound. And 224,000 into 9 by 12. How much of the taxable total profit is found to be equivalent to 9 months? This is of 168,000 pound. So the period which is like common between two companies, Halo Limited is in a situation to surrender a loss of up to 135,000 pound, while Shallow Limited would be able to make an adjustment of up to 168,000 pound, and we'll have to decide one maximum figure. So out of these two, we'll be applying the criteria of lower off, and according to that, maximum 135,000 is the figure of loss that could be surrendered by Halo Limited to Shallow Limited. This is the maximum figure of loss. Though there could be a chance that Halo Limited would want to surrender only 90,000 or only 80,000. So this is the maximum limit. I mean, not more than this limit, the loss could be surrendered, but any lower figure, any figure which is lower than the maximum one could be surrendered. So the answer has to be 135,000 pounds, right? Now we have fifth OT, which says that for the year ended 31st March 24, Sizable Limited had taxable total profits of 820,000 pounds, and for the year ended 31st March 25 had taxable total profits of 970,000 pounds. The profits accrue evenly throughout the year. The company has only one 51% group company for the last many years. How will Sizable Limited pay its corporation tax liability for the year ended 31st March 25? See, first of all, I need to determine the status of Sizable Limited, because if a company is said to be a small and medium-sized company, then they would be paying their taxes as a lump sum amount within a period of 9 months and 1 day after the end of accounting period. But if a company is said to be a large company, then they would be paying their taxes in quarterly installments. Okay, so let's see that what had been the status of Sizable Limited for the year ended 31st March 24? Their total profits were of 820,000 pounds, right? This is the taxable total profit. And in that figure, we need to add the amount of dividend being received from such companies in which shareholding is not found to be more than 50%. I mean, the companies which are considered as non-associated companies. But no such information is given. Had there been any dividend received from non-associated company, then it would have been added to the taxable total profit. And the final figure is called augmented profit. So the first step is that you determine the augmented profit and then compare it with profit threshold. And what the profit threshold is, it is of 1.5 million, I mean 1,500,000 pounds. Though this profit threshold is subject to change if accounting period is of shorter than 12 months. By the way, it is not the case over here as the company has made accounts for the whole year. And this is also subject to change if the company is having any associated company on the basis of group number. As according to the question, Sizable Limited has got 51% shareholding in one company. So they have got one associated company. So Sizable and that one company, altogether in the group, there are two companies. So this profit threshold is subject to be divided over two. And now what the revised profit threshold is, it is of 750,000 pounds. So their augmented profit are compared with the threshold. It is greater than the threshold, which would mean that the company is a large size company. But see, they are not asking that how they will be paying taxes for the year ended 31st March 24. They are asking that how will they be paying taxes for 31st March 25. Now I need to consider the current situation as well. Their taxable total profit, and how the taxable total profit is computed. We just total up trading profit, property income, interest, chargeable gains, then we deduct QCD, and that's how we come to know what the taxable total profit is. So the total profit is of 970,000 pounds, and they are talking about now year ended 31st March 2025. And then we need to add the dividend if it is received from any company in which shareholding is not found to be greater than more than 50%. I mean, non-associated company dividends, but that's not the situation over here. So the augmented profit turns out to be equivalent to 970,000 pounds. Now we'll be comparing this augmented profit with the profit threshold, though the profit threshold is of 1,500,000 pounds, but it is subject to change. How? If accounting period is of shorter than 12 months, or if there is like found to be any other company in the group, which is once again, there are two companies in the group. So it is subject to be divided over two. And the revised profit threshold is of 750,000, which is once again more than the augmented profit is more than the profit threshold, which says that it's a large company. So it's a large company. Large company will have to make quarterly installment payments if they were large in the previous period as well, which is why I did do the computation for the previous period, because in such cases where the company would have become a large company for the very first time, they will still be treated as a small and medium-sized company. They will still be making lump sum payment in 9 months and 1 day after the end of accounting period. But if this is not the first time you have become a large company, so second time and onwards, you shall be paying quarterly installments. So quarterly installments is like going to be the correct option. And there are always the 4 quarterly installments. The first 3 quarterly installments are paid on the basis of estimation, and for the sake of estimation we will never pick up the data for the previous period. And I mean, the thing which we do in case of income taxes, where we pick up the tax payable and NIC for the previous tax year, here in this case the current period estimation is required. But see, they did not use the word of estimation which could be made for the current period. And if no current period estimation is given in the question, then whatever the actual data for the current period is, we will take it up as it is. But we will never be using the values for the previous period. So what the taxable total profit for the current period is, it is of 970,000 pound. In the absence of estimation, I will be picking up the same value, the actual data for the current period. So 970,000 is the taxable total profit. First of all, tell me that having 970,000, a huge taxable total profit, at what rate company would have paid the taxes? Of course, the company rate would have been 25%. Can you please tell me what is the total corporation tax liability for the company? 25% of this value will be what? 242,500. Okay. So this is like said to be the corporation tax liability. And the corporation tax liability for a small and medium and large size companies are to be calculated under the normal pattern. We have three rates: 19%, 25% is margin leave, and 25%. But here we'll be applying 25%. But the question is about that, how will they be paying? And I have determined that they will not be paying this amount as a lump sum. Rather, in the 4 quarterly installments, this amount shall be paid. So I'm just going to divide it over 4. Either you divide it over 4 or you are going to take 25% of it. You will get the same answer. Can you please tell me? We have determined that this is a large company, so they'll be paying quarterly installment, but quarterly installment will be carrying a value of 60,625. 60625. And again, luckily, we have found the answer in the list. So this was like just the problem with the first MCQ so far. But with first MCQ problem, there is still a tendency that we might expect any other problem in the later MCQs as well. But fortunately, we have the answer over here. Is this thing understood? Why didn't you choose the last option? See, the last option is based on the basis of taxable total profit for the previous period. And in case of companies, we never take what has happened in previously. A manager asked to make a fresh estimate with respect to the current period. And if no such estimation, which is like based on manager's perspective, is given in the question, then we shall be using the current period data. So 970,000 will be taken as if the individual has made the same estimation. And on the basis of that, we will be paying the quarterly installments. But this is like very much different from what we apply in case of income taxes. Is this thing clear? Okay, so let's quickly move towards the next MCQ. And it says that for the year ended 31st December 2024, Lateness Limited had a corporation tax liability of 60,000 pounds, but they did not pay it until 31st March. And it's not a large company, so they must be falling under the capacity of a small and medium-sized company. You have to tell me that how much interest they had to bear in respect of their late payment of corporation tax. Now it's up to you. Take 1 minute and let me know that what has to be the answer. So I have got, yes, I know it's running out of battery. It will be charged shortly. Could someone please tell me that what has to be the answer for this? First of all, you need to figure out that what is the due date for the payment of corporation tax, as the company has made accounts for year ended 31st December 24, and it's a small and medium sized company. So their due date, the deadline was 9 months and 1 day after the end of accounting period. So after 31st December 2024, 9 months will have been completed by 30th of September 25, and due date will appear on 1st of October 2025. But when they actually paid the corporation tax, they paid the corporation tax on 31st of March 26. So for how long they have delayed the payment of corporation tax? For 6 months, right? And 60,000 is the liability. on which interest shall have been charged at the rate of 7.75%, but they were just 6 months late in paying their corporation corporation tax liability. So only the interest with respect to 6 months shall have been charged. Can you please tell me what has to be the appropriate answer for this? Or it's like October, November, December, January, February, and March. So yes, they are late for 6 months. 2325. Okay. So fortunate enough that at least we can find the answer. It's a drop-down menu where the menu is being dropped down and we find the correct option, right? Is this thing clear? Now we have another question. It says that on 24th November 24, I mean in the tax year 24-25, Alice sold an antique table for 8,700 pounds. See, it's a concept of table. So it's like falling under the capacity of chattels. And the table was acquired for 3,800 pounds. So disposal is made for more than 6,000, but cost is for less than 6,000. What is a chargeable gain in respect of the disposal of the antique? So whensoever the chattels, I mean the movable assets are going to be sold for more than 6,000, but they were acquired, I mean the cost is found to be of less than 6,000, then we will be computing the gain by two ways. First one, the actual gain will be computed, and then we will be applying the formula. How the actual gain will be computed, we will take into account the disposal figure and deducting the cost, and under the format we shall come to know what the gain will be, as 8,700 pound is the disposal value and 3,800 is the cost. So what is going to be the gain under the format? I mean, what the true actual gain figure will be, it is going to be of 4,900. Thank you. But we will compare it with the formula as well, which includes the gross disposal proceeds, and that's of 8,700, deducting 6,000 and not taking the actual cost into 5/3. So could you please let me know that under the formula implication, what is going to be the gain? It is of 4,500 pounds. Okay. So out of 4,900 and 4,500, which one is on the lower side? It's 4,500 pounds. So 4,500 is said to be the chargeable gain on which the tax shall be paid. So that's going to be of 4,500 pounds. I hope this is like clear to each and every one of you. Now, we have got a question related to IHT, and I am giving you people 2 minutes in order to deal with this question. It says that in November, Jane made a cash gift of 800,000 pounds after deducting all available exemptions. So this is the chargeable amount of gift. She paid the inheritance tax in the lifetime, and she hasn't paid any lifetime gifts. So what is the amount of this inheritance taxes? It is not going to take much time. You just need to calculate lifetime IHT on lifetime transfer. I've got only one answer, and as the time is already up, so I'll be doing the calculation myself. Let's see whether this answer is correct or not. First of all, whensoever a person is making transfers in the lifetime, be it the transfer made to any individual, I mean, if it is a pet or a CLT, we shall be taking into account the chargeable amount of gift. I mean, we simply pick up the transfer of value and then deduct all the available exemptions. In case of pet, we just do the calculation with a view that if donor dies within 7 years of making the transfer, then death IHT shall be computed. But on CLT, the taxes are due immediately. So the transfer of value minus exemptions is, in case of CLT, only the annual exemption for the current year and previous year shall have been deducted. And there we have 800,000 pound, which is called as chargeable amount of gift. In case of pet, we stop doing the calculation once this amount is determined. I mean, the value less exemptions. But in case of CLT, we'll have to continue further. We need to see that as the tax is going to be paid, so what the NRB nil rate band under the current tax year will be, as the gift is being made in the tax year 24-25 and we are calculating lifetime IHT. So the tax year in which the gift is being given, its NRB will be taken into account. If for 24-25, NRB is of £325,000, but it needs an adjustment for the gifts made in the last 7 years, considering it is explicitly said that Jane has not made any gifts before, so whole of the NRB will be available. So after deducting the NRB of £325,000, how much of the value is going to be left? That would be of £475,000, on which lifetime IHT on lifetime transfer shall be due, as donor is saying that she will be paying off the taxes, so the rate will be 25%. If the donees, I mean the ones who have received the gift, the trustees of the trust would have said that they would be willing to pay off the taxes, then the tax rate would have been 20%. But here, as the donor, Jane herself has said that she will be paying the taxes arising on this gift. So 475,000 into 25%, what would it be? 118750. So this is going to be the lifetime IHT, 118750. There's a question, why not 20%? See, Jane herself, the donor, the one who was giving away the gift, has said to pay off the taxes, which is why the rate of 25% had to be applied. If it is said the people to whom, the trust to whom this asset is given, I mean, the donee of the asset in this case would be those who are handling the trust, which we call as trustees. Then the donee's rate is of 20%, but in case of donor, the rate will be of 25%. There is a concern of £325,000. See, when you cover inheritance taxes, you will come to know that NRB is a very main feature of calculating inheritance taxes. We always get NRB while calculating IHT, but NRB is to be adjusted for the chargeable transfers made in the last 7 years prior to the date of gift. Okay, so quickly moving towards another MCQ, it says that during the tax year 24-25, Mildred made 4 cash gifts to her grandchildren. For each of the gifts listed below, click in the boxes to indicate whether the gifts will be exempt or not under the small gift exemption. See, what the concept behind small gift exemption is, that as long as the value of the gift given in a tax year to one person shall be of £250 or less than that, then the value will be exempt under small gift exemption rule. But if it is like crossing the value, the limit of £250, then the whole of the amount shall be considered chargeable. So when 400 was given to Fred, see, 400 is crossing £250, so it is not exempt. This is not going to be exempted under small gift exemption. 140 was given to Minnie, but in the same tax year, a further gift was made to Minnie as well. And if to the same person multiple gifts are being given, then we need to know the cumulative value, because cumulative value, as long as it remains under the threshold of £250, then we will not be having a need to pay any IHT, as it will then be covered under small gift exemption. But 140 and 280 will be crossing £250 limit. So unfortunately, both of the gifts are not going to be exempt. But when Winifred, to whom only one gift is being given in the tax year, so the cumulative figure is once again equivalent to £175, which is less than £250, and that's why the value of the gift will be exempt. Yes, you're right. Not the first 3 are not exempt, and the last one is exempt. Is this clear to each and every one of you? See, the rule is, as long as the total gifts made to one person in the tax year, if they are of £250 or less than that, then they are exempt. To Winifred, 1 gift was made, so the total is only 1 gift having a worth of 175, so it is less than 250, so it is exempt. To Minnie, 1 gift was small, but the other one was not. And if to the same person multiple gifts are being given, then we need to take into account the cumulative value. The cumulative value is crossing the threshold of £250, which is why the whole value will be chargeable. To Alfred, though only one gift is being given, but the one gift is like sufficient enough, it is crossing the threshold of £250, which is why it is not even going to be taken as an exempt gift under small gift exemption. Now we have another question which is related to VAT. It says that for the quarter ended 31st March 2025, ZIM had standard rated sales of 49750 and standard rated expenses of 22750. Both figures are exclusive of VAT. But he uses the flat rate scheme to calculate the amount of VAT payable, with the relevant scheme percentage for the trade being 12%. The percentage reduction for the first year is not available. See, whenever a person joins a flat rate scheme in the first year, a comparatively lower flat percentage is provided to them, but that's not the case over here. And that's specifically the thing which is not usually examined in TX syllabus. How much of the VAT will ZIM have to pay to HMRC for the quarter ended 31st March 25, right? Okay, so as ZIM has joined flat rate scheme, so I will have to take total of all types of gross sales. So total would mean I will take up exempt sale value, the zero rated sales value, the reduced rated sales value, and the standard rated sales value. Of course, in case of exempt and zero rated sales, no tax will have been taken up from the customer. In case of reduced rated sales, I must have taken up 5% of the sales tax, 5% of the VAT from the customer. And in case of standard rated sales, I must have charged 20% to the customer. So whatever we have charged to the customer, the selling price and the relevant rate of VAT, that shall be clubbed together in order to get to know what the total value of sales is. See, in this question, they haven't told us about any exempt, zero or reduced rated sales made by ZIM. This is only the standard rated sales he's making, and he being a taxable person, he must be charging VAT at the rate of 20%. So whenever you get registered with HMRC, you will have to charge VAT according to the rate which is specifically applicable on that specific type of supply. So what the sales figure is 49750, and it is exclusive of VAT. So 49750. On this value, he must have collected 20% of the VAT from the customer. When you join flat rate scheme, it doesn't mean that you will be collecting the flat amount, flat rate from the customer. You will be charging exactly the specific amount of VAT which is applicable on the product. So what is now going to be the gross amount of the sales? Can you please tell me 49,750 and 20% of this figure? What is going to be the gross value of sales? This would be of 59700. So this is something which he has collected from his customer, but when he will have to pay the tax to government, he will be paying only the flat rate, which is 12% of the gross value. What would this figure be? And in case of joining the flat rate scheme, you will no longer be in a position to reclaim input VAT. 7164. So what they have asked, how much of the VAT ZIM will have to pay to HMRC for the quarter ended, though he has collected something else, but he will have to pay only 7164. Is this thing clear? Okay, so let's quickly move towards 11th OT, a very simple one. Just read it and let me know that according to you, which option has to be the correct one. So they have given us the list out of which two assets will never lead to any calculation. Neither the gain nor the loss will be calculated. It's about a car. Whenever it is sold, we will neither be calculating any gain or loss. It's an exempt. And whenever the gilts, the UK government security are sold, neither the gain nor the loss will be computed by an individual. But keep one thing in mind, that as long as individual will be receiving an interest on the guilds, the guild's interest will be taxable. The interest will be mentioned under savings column, and one will have to pay off the taxes. But when these investments, the guilds, are sold, then neither the gain nor the loss shall have to be computed. But if the guilds are sold by companies, then definitely we shall be computing the gain in a normal way, as how we compute the gain for the rest of the assets. We take up the disposal proceed and then deduct the cost. But they are asking from individuals' perspective, because individuals are liable to pay capital gains taxes. Companies never pay capital gains tax. They pay corporation tax on the capital gains made. Right? Is this thing clear? Now we have another question. Winston has already invested £8,000 into a cash ISA in the tax year 24-25. Still within the tax year 24-25, he wants to invest further into stocks and shares ISA. By the way, could you please tell me what is the maximum limit of having an investment into an ISA for a tax year? It is of 20,000. So he's already made an investment of 8,000 this year. So what is the remaining investment that he can still have in the same tax year? And that is the question as well. Out of 20,000, 8,000 has already been invested. So he still may make maximum investment of £12,000, either into the cash form or into the form of stocks and shares ISA. So £12,000 is the correct answer. Then we have a very simple question that Ming is self-employed, and for each of the types of the records listed below, click in the boxes to indicate the date until which Ming must retain the records using in preparing her self-assessment tax return for the tax year 24-25. Keep one thing in mind, that the record of employees are to be kept for 1 year after 31st January following the tax year. So if I am an employee and working somewhere else, I will not be retaining my record. Rather, it is the responsibility of my employer to retain the record for me. My record should be retained. And for how long? For 1 year after 31st January. Apart from this thing, if someone is doing a business, if someone is like letting the property out, if someone is like dependent on rent, or the interest or the dividend, I mean, apart from employees, if there is anyone else out there, he will have to retain their records for 5 years after 31st January following the tax year. So Ming is a self-employed person. That means he's running his own business. Whether the business records related to his business activities are, or maybe the records related to his non-business activities are, maybe he's like receiving interest or dividend. So all the records are to be kept for 5 years after 31st January following the tax year. So his tax year is 24-25. After the end of the tax year, which is 5th April 25, 31st January would appear on 31st January 26. And after that, we have 5 years. So from 31st January 26 plus 5 years, that means 31st January 2031. So 31st January 2031, that is basically the deadline by which all the records are to be kept, whether they are related strictly to his business or not. Is this thing clear? But if the records are not kept for 5 years, then for each year for which the record has not been kept, the penalty will be of £3,000. So if someone has not kept the record for 2 years, 3,000 into 2, that means £6,000 will be the cumulative penalty. Yes, 5 years is the criteria. Shall I go forward? Okay. So now we have the second last OT for Section A. It says that Moon Limited. See, it's a case of company. They have had the following results. Year ended 31st December 24. Their loss is of £105,000. 4 months period ended 31st December, as company may make accounts for 12 months, less than 12 or more than 12. So before that, they have made accounts for 4 months. Though when company will have to pay the corporation taxes, the corporation tax pro forma can be of 12 months or less than 12 months. It can't cross the threshold of 12 months. And then before that, they've made accounts for a year where the trading profit was of £96,000. The company doesn't have any other income. I mean, neither they have any interest, rental income, dividend, or anything else, though the dividend is an exempt income for corporation tax purposes. Then how much of the Moon Limited's trading loss for the year ended 31st March 2016 can be relieved against its total profits of £96,000 for the year ended 31st August 23? So how much of the loss they will be adjusting in this year? See, it's the case of company, so it is unavoidable to not to make any adjustment in the current period. I mean, they will definitely have to make an adjustment in the current period, and afterwards they can go back. But in the current period, they will have to make an adjustment of the losses against total profit before QCD and see their trading. This is only the trading loss that they have, and they have no other income. So there is a trading loss for which I mentioned 0 in front of this source, and there is no income, so no adjustment of the loss could be made. And which is why we can now carry back our losses. But previously, the company has made accounts for 4 months for which they only have a trading profit of £43,000. So 43,000 is the profit. And I need to know if there is any rental income, interest, chargeable gains, but there is like nothing as such. So the total profit is of 43,000. The loss figure is quite huge. It is of £105,000, but only against the total profit of 43,000, one can make the maximum adjustment of £43,000, and that's how the leftover total profit figure will be 0. Then the company had made accounts for the year ended 31st August 23 before. Against which the loss could be adjusted, because technically we may carry back our losses for altogether 12 months. We have already adjusted our loss against the total profit for the previous 4 months, and still we have an option to make use of 8 months. But in the previous period, as the accounts have been made for a year, for which the profit figure is of £96,000, there is no rental income, interest, chargeable gains, and that's how the total profit will be of £96,000. This £96,000 is not completely available to us for adjustment purposes. I need to apportion it. If £96,000 is said to be the total profit for a year, how much of the total profit will be found equivalent to 8 months? Can you please tell me how much of the profit will be found equivalent to 8 months? £62,000. So again, 62,000, if we can be like able to make use of the whole of the loss, then it will be done. How much of the loss is left, by the way? The loss figure was of £105,000, against which nothing was adjusted in the current year. And when we carried back for 4 months, £43,000 got adjusted. Could you please tell me that how much of the loss is still available, which we were trying to carry back? How much of the loss? $64,000. Is that 62,000? 105 less 43 must be 62,000. So 62,000 of the loss is like still left behind. But now just let me know that how much of the total profit is found to be equivalent to 8 months. How much of the total profit figure is found to be equivalent to 8 months? Okay, that is 64,000. Right. Thank you. So out of this 96,000, we can make use of £64,000. But see, the loss is just left behind for £62,000. Though I may have a permission to make an adjustment of £64,000, but why would I be like taking into account the whole of the figure when I don't need it as such? Because the leftover loss figure is just of £62,000, and that is why I'll make a complete adjustment of the leftover loss of £62,000, because it was permissible. I could do it. So how much of the loss we have adjusted against the year ended 31st August 23? It is of £60,000, despite the fact we could not have the whole of the profit available for adjustment purposes, but 8 months profit was sufficient enough to absorb the whole amount of loss. So how much of the loss is going to get adjusted in this year? This is of £62,000. Is this thing clear? Is this thing clear? All right, so let's have the last OT for section A, and very simple and straight one. It says that Nigel has not previously been resident in the UK, being in the UK for less than 20 days every tax year. So he was like probably an automatic resident, a non-resident person previously. But for the tax year 24-25, he has got 3 ties in the UK. And now he might be planning to stay a little longer, but he doesn't want to be treated as a resident person of the UK. And this is something being asked over here, that how much maximum days he could spend in the UK without being treated as a resident in UK for that year. So I'm just going to open up the table. According to this, I just need to decide the status of Nigel, considering he was previously non-resident. So if he is previously a non-resident person, and how many ties he does have? He has 3 ties. Sorry, he was not previously resident. Okay, so he was not previously resident and he has 3 ties. So if someone is having 3 ties or more, he'll be treated as a UK resident person if he stays for 91 days to 120 days or even for more. So that would mean that if he is going to stay up to 90 days, even if he's having 3 ties, he will be playing a safe game. He will still not be caught under the UK residence rule. He will still not be treated as a UK resident person. So a person having 3 UK ties who is not previously resident, if he stayed maximum up to 90 days, he will still not be treated as a resident person and will still not be liable to pay any tax at all. So 90 days is the correct answer. Is this thing clear? Okay, what did you not understand? They said that having 3 UK ties, for how long he can stay in the UK, and he don't want to be labeled as a resident person. The one who is living in the UK is not necessarily be called as a resident person, because resident is a very specific term from tax point of view here. If one is declared as resident from HMRC, that means he will have to pay UK taxes as well. But if someone is not to be like regarded as a UK resident person by HMRC, then that person will not be liable to pay tax at all. So what was his previous status? He was previously not resident. And this is the table which you can make use of. This will be provided in your exam, and its recording is available on the portal as well. That if a person is like non-resident, just click on 3 ties. If someone is having 3 ties at least or even more, he'll be resident. He'll have to pay taxes if he will stay for 91 days or even more. So that would automatically mean that if he stays for less than 91 days, less than 91 means maximum 90 days, even if having 3 ties, he will not be regarded as a resident person. He will not be caught under tax net. Now, is this thing clear? Now, quickly moving towards section B, I think we can at least handle one OT case of section B. In section B, again, we'll having 3 OT cases. Every OT case will be having 5 OTs, and each OT will be carrying 2 marks. So altogether, this section will be of 30 marks again. Whatever the workings you are going to do, either on the scratch pad or if you are given with the loose sheet, that will not be making any impression on the examiner. So whether you do any calculation on the rough sheet or if you don't, examiner will not be having a look at it. They are auto marked. So there is no need to make specific performers, formats. You need not to like be conscious about the way the answer is being presented. All you need to do is you need to figure out the correct answer so that you may secure maximum marks. Okay, So this is the first OT. I'm just going to show you a certain portion of the question. Kindly start reading the question. Then I'll scroll up the screen to show you the remaining portion of the question. And afterwards, we'll come across their OTs. Kindly start reading the question. I believe that you people must have read the question completely. Here is the first OT related to this OT case, which says that what is grant's capital gains tax liability for the year 24-25 in respect of the disposal of the shares in Dub Limited. So technically, Dilroy had originally made a gift of 25,000 £1 ordinary shares in Dub Limited to his son. Whenever two connected persons are making a transfer in between each other, then it is the market value which shall be taken as disposal proceed for the donor. So in this case, technically what has happened first, that Dilroy had given the shares to Grant. Dilroy had to calculate the gain because he had originally transferred the shares to Grant. Disposal value shall be taken as equivalent to market value, which is given in this case of £240,000. And Dilroy himself had acquired the shares at a par value. I mean, on the face value. And what the face value of these shares is, this is of £1. So all these 25,000 shares were acquired for £1 each. So that's of £25,000. And that's how for Dilroy, the gain figure is of £215,000. But then, as this is the unquoted company shares gift, and Dilroy and Grant have got a mutual consensus to hold over the gain of this business asset, the burden of the gain was shifted to Grant. Dilroy was not supposed to pay any tax at all, and whole of the gain burden was transferred to Grant, as Grant will be taking the responsibility to pay off the taxes on this gain. But right now, Grant did not have to pay tax. Rather, he had to adjust his cost. Now, what basically his cost is, the recipient of the asset shall have to enlist the cost over the market value. I mean, the market value at which donor has shown their disposal proceed, the recipient will be showing the same market value as their cost, but their cost is going to be amended. In fact, we should call it as base cost, as this is going to get reduced by the amount of the relief which has been claimed in this regard, which is called as gift holdover relief. And that's how what is going to be the base cost for Grant for these shares. This is going to be equivalent to £25,000. So this is like said to be the base cost of these shares. Now, who has these shares? Grant. And what is the cost for him? This is £25,000. But then what happens is that Grant even sold the shares in Dub Limited. In the same company, he had sold the shares for £240,000. So for £240,000 in the same tax year, he has sold the shares. So probably he'll be like having the same gain, 240,000 less his base cost, which is of £25,000. And that's how for him the gain value is going to be of £215,000. But this is the gain value. They're asking what is going to be his CGT liability, how much capital gains tax liability he shall have to pay. See, there is no other disposal he has made in the tax year, right? So this is his overall chargeable gain, against which, first of all, he will deduct his annual exempt amount, which is of £3,000. Is that so? Or he should not deal with the CGT? Just have a close look at the requirement of the question. In fact, at the content of the question. They say they have already made other disposals as well, for which the information is not given, but they have made the other disposals and they have already used their annual exempt amount. So annual exempt amount is unfortunately no longer applicable. So whole of the gain is said to be the taxable one. This is like said to be their taxable gain, on which how much of the tax rate shall have to be applied. See, Grant is not going to qualify for business asset disposal relief because he is not an employee of the company. As for the sake of applying gift business asset disposal relief, one has to be an employee of the company, as well as the minimum shareholding has to be of 5%. And both of these things shall have been kept for at least 2 years prior to the date of disposal, which unfortunately Grant is not fulfilling these two conditions. And he himself is a high rate taxpayer. So the low rate is 10% and the high rate is 20%. So he shall be paying taxes at the rate of 20%. Could you please tell me that upon the disposal of these shares, what is going to be his CGT liability? 43,000 pounds. So 43,000 pound is said to be the correct answer. Is that clear? Now see, if Dilroy had instead disposed of the shares to any unconnected person rather than giving away the shares to Grant. See, we had done the calculation before. His gain was same, 215,000 pound. But Dilroy, I mean, despite he being a high rate taxpayer, he had to pay tax only at the rate of 10% because he was eligible to have business asset disposal relief. And why is this so? See, it was clearly said that Delroy was working in the company. He was the sales director since July 2013. I mean, the minimum criteria is of 2 years, but since long, he's like working as an employee and the shareholding is quite enough. He's having 25,000 number of shares and the issued share capital is of 100,000, which means that he is having 25% shareholding and the minimum shareholding criteria is of 5%, which is like quite higher, which is like what they are having right now. And that's also like since long, from the same date of 1st July 2013, though the shareholding retention criteria has to be the same 2 years prior to the date of disposal. So if Delroy instead had disposed of the shares to any unconnected person rather than giving it to Grant first and claiming the gift holdover relief, he had to pay taxes, and that way only the tax at the rate of 10% would have been charged. But unfortunately, he had gone a longer way. So what the question is that which two of the following statements would have been true in relation of the CGT implication if Delroy had instead sold 25,000 shares in Dub Limited himself for 240,000 on 10th January rather than gifting the cash and then gifting the cash proceeds to Grant. One thing which I have already clarified that he himself will be eligible to have business asset disposal leave. And see, once he had sold the shares to some unconnected person, an outsider, and he had gathered a cash value, and upon giving a cash value to his son Grant, there will be like no CGT. This is not said to be a chargeable disposal, though it would be treated, it would be caught under IHT, but right now it will be treated as pet. So there's going to be no even inheritance tax in the lifetime as well. But as far as CGT is concerned, it is all about the disposal of chargeable assets, precisely the non-current assets, but cash is a current asset and it is not going to be regarded as chargeable disposal. So whatsoever the transfer transaction would be made in between Dilroy and Grant, that would not lead to any CGT. So these two options will have been correct. And this kind of advantage could be availed, but unfortunately, they did not go for that. Is this thing clear? So what is the Marlin's chargeable gain for the tax year 24-25? So this is like something related to the next passage. Marlin has sold a residential property and 497,000 is the disposal proceed, though the property was purchased for 152,600. So I just need to see what is going to be his gain. 497. This is the disposal value of the residential property while the cost is of 152,600. So when Marlin has sold the property, it would lead to a chargeable gain of, can you please tell me? What is going to be the original gain? $497,000 less for 152,600. What's going to be the answer? Though this is not the required answer, but what is going to be the gain? 3,444,00. Thank you. So 3,444,00 is going to be the chargeable gain. But see, it was Marlon's main residence, and whensoever someone is going to dispose of their main residential property, it will be subject to an exemption under principal private residence relief rules. It says that throughout the period of ownership, the property was occupied by Marlon and Elvita, his wife, as their main residence, but 1/3, this is the controversial point, that 1/3 of the property was always used for business purposes by the couple. Now the thing is that see, they have mentioned a relief, entrepreneur relief, which is no longer a part of your syllabus. It's called BADR, business asset disposal. And of course, it has nothing to do with the disposal of a certain asset. Rather, BADR is like relevant to the disposal of either the whole business or a substantial part of the business. Okay, so had they occupied the building completely, and that's also for private purposes, then whole of the gain would have been exempted under principal private residence relief rules. But though they have acquired the building completely, but unfortunately 1/3 of the house has never been retained for private purposes. So whatsoever the portion was not retained for private purposes, this will unfortunately no longer qualifying for PR, principal private residence relief. Rather, it will become chargeable. Could you please tell me that 1/3 of 3,444,00 would be like what? 3,44,400 into 1/3. What this figure would turn out to be? 1,448,00. So this is like going to be the gain which is chargeable, and the remaining gain, I mean the difference in between 3,444,00 and 1,448,00. Can you please tell me the difference? 229,600. This gain will have been exempt under principal private residence relief rules. Though they did not ask about principal private residence relief, but I just wanted to mention one extra thing. Otherwise, obviously, all those things which were not required to be done, there is no need to spend time on them when you are doing your exam. Okay, so what is the chargeable gain for Marlon? It is of 1,148,00. This is the gain on which Marlon shall be liable to pay off CGT. Is this thing clear? Now, here comes a very comprehensive type of OT associated with this, as it does involve a planning perspective, that what is the amount of CGT that could be saved if Marlon had transferred 50% ownership of the residential property to Elvita before its disposal? Okay, before answering this question, there's a question in the dialog box. As this was their residence, we believe that this must be their principal residence, the main residence, which is why they have thoroughly occupied it. It's if someone is like living in some house for the whole time long, that means that is their main residence, right? Otherwise, I mean, by main residence, I mean to say, if a person is like intending to or actually living in a particular property, that is said to be their main place of living. So it meant why 2, 3 was not charged, because they had occupied 2/3 of the property for private purposes as their house. So for houses, for the property being used for residential purposes by the people, for their families, this is like something being exempted under principal private residence relief rules. But if the same property is like going to be used for doing some business activity to a certain extent, then this is like said to be something chargeable. Yes, only business portion is not meant to be exempted under PPR. For business gains, there are other reliefs, the rollover, the holdover and all, but not the principal private residence relief. Now, students, what they're asking that if 50% of the ownership would have been given by Marlon to her wife, Elvita, before making a disposal to outsider. So that would mean that whatever the gain figure is, half of the gain will be chargeable upon Marlon and half of the gain will have been paid by Elvita. Can you please tell me what is going to be the half of this gain? 50% of this, or you simply divide it over two. This would be like equivalent to 72,400 pounds. So on the gain of 72,400, Marlon shall be liable to pay off the taxes, and so 7,200, 400 pounds, Elvita will be liable to pay off the taxes. So altogether, the couple will be paying taxes on the gain of 144,800. But the thing is that, see, Marlon is a high rate taxpayer, as it was mentioned in the question. But what is the advantage of transferring the ownership prior to the disposal to an unconnected person? That Elvita does not have a taxable income. So at least a gain of up to 37,700. I mean, to the extent the gain could be adjusted in the basic rate band, she will not be in a situation to pay off the higher taxes. Rather, she'll be paying lower taxes. And neither of them have made any other disposal. So when previously Marlon was paying off the taxes, if Marlon had used the property, if Marlon had owned the property all by himself, then his gain was 144,800, against which he could deduct annual exempt amount of 3,000 pound. For once annual exemption would have been deducted, the gain would drop down and he would be paying lower amount of taxes. But if he would have shared the ownership with Elvita, then Elvita herself will be able to reduce the gain further. And then whatever the gain is going to be left behind, she will be at least using the basic rate band, which unfortunately Marlon couldn't do before. Why? Because he was already a high rate taxpayer. He did not have any available basic rate band. So I just need to see that how much of the tax will have been saved if this strategy of 50-50% will be taken into account. See, Marlon was paying taxes at the rate of 24%. Agreed? Do you agree to this thing? Marlon was a high rate taxpayer. It was a residential property. So though it was being used for business purposes, but the property was meant for residential purposes. So he was paying taxes at the rate of 24%. So if Elvita would be taking up a proportion of the gain, she will be able to deduct 3,000. So the amount which was previously subject to taxes by Marlon at the rate of 24%, this will no longer be paid. Why? Because Elvita will be able to deduct her own annual exempt amount as well. She would be able to reduce her gain and she will be able to reduce the taxes which could otherwise be paid if Marlon had instead sold the property all by himself. So how much of the tax will have been saved in this regard? 720. Thank you. And then the remaining gain. Unlike Marlon, the remaining gain is not going to be subject to the rate of 24% completely. Rather, as she doesn't have any taxable income, so again, which could be fitted in the basic rate band. And how much is the available figure in the basic rate band? This is of 37,700, though the figure of basic rate band could be extended with the help of gross contributions made into the gifted scheme or the personal pension scheme. But here, 37,700 is the amount which is going to be adjusted, which is like going to be used by Elvita for the sake of calculating CGT over the basic rate, where instead of paying taxes at the rate of 24%, she will be paying taxes at the rate of 18%, because 18% is said to be the lower rate. So she will then be able to save at least 6% more, while the rest of the gain will definitely be catching the rate of 24%. And in that case, she and Marlon will be like showing no difference. But at least a gain of up to 37,700 will be subject to saving of 6% additional amount of taxes. What that figure will be? It is of 114,800, not 144. I was just relying on your calculations. Just do it quickly. 114,800. 1/3 of the gain was 114,800. Just people just do the calculation. 1/3 of the gain, 3,444,000 into 1/3. Would that be 144,800 or 114,800? 114,800. Okay, so it was 144,800. Oh, okay, no worries at all. That means we are at least saved from like repeating any calculation. So we are going exactly in the, or it is 114. Just tell me. Shall I have to change it? Okay. So this is 114,800. Okay, that's. And half of this figure will be chargeable upon Marlon and half will be chargeable upon Elvita. Could you please tell me what is the half of 114,800? 57,400. All right. And now I believe that you are giving me the correct figures. Okay. But in the end, we're not going to have any impact on the answer, because whatever the gain figure Elvita will be having, her gain will be first reduced by £3,000, and altogether the tax at the rate of 24% shall have been saved. While on the remaining gain, which could be adjusted in the basic rate band, she, instead of paying taxes over the higher rate, she'll be paying taxes at the basic rate, and thus 6% will be saved further. Could you please tell me what is found to be equivalent to 6% of 37,700? The question is why 3,000 is charged at 24%, given Elvita is a basic rate taxpayer. See, she will be able to remove her gain by 3,000. The gain will no longer be chargeable by 3,000. So altogether, 24% will be saved, which means that the gain which was, if the gain would have been taxed by Marlon, then he had to pay tax at the rate of 24%, but shifting it to Elvita would lead to a reduction of the gain, and then whatever the tax which could previously being charged would be saved altogether. 2262. Okay, so 2262 is the amount being saved further. So could you please tell me the grand total of the overall taxes which are being saved in this regard? 720 and 2262. 2982. Okay, so 2982 is the amount of taxes that will be saved if 50% of the ownership will be transferred by Marlon to Elvita before making the disposal to any unconnected person. So 2982. All right. Now we have the last question with respect to the same OT case, which says that what is the payment date for the CGT payable on the disposal of the residential property on 28th March 2025. Whenever the residential property is sold, whether it qualifies for PPR or not, if there happens to be any tax, then we do not wait for the normal due date. Rather, the taxes will be due within 60 days after the date of disposal. And the returns are to be filed at the same time. But when the tax would come to an end, then we will be computing the CGT liability once again on the overall gains. And then we see that how much of the tax we have already paid with reference to just 60 days after the date of disposal. And only then the balance will be paid. But here, as the residential property got sold on 28th of March, you just need to see that where the 60 days would be completed. So from 28th March 25, just start counting where the 60 days will be completed. I believe 60 days will be completed on 27th of May 25. Is that so? See, this is the concept where the residential property is being disposed of. You are liable to pay a payment on account. I mean, a certain installment of the tax shall have to be paid at that time when the residential property is sold out, and in how much period the relevant taxes are to be paid, that should be done within 60 days after the date of disposal of residential property. Yes, it is there in the CGT chapter. So after 28th of March, 60 days will come to an end on 27th of May. Is this thing clear? Okay. Now, students, the time is already up and we have at least been able to do one OT case out of section B. I think that I shall be sharing the answers related to second and the third OT case. And if in case later you find any problem in relation to the answer to any question, then you may simply coordinate with me. I have already shared my number with you people. If later on you come across any problem in respect of any answer, but I believe that these questions are not very tough. What do you say? Is that okay with you all? See, it is a good blend of tough and easy things, which have been tested as far as this specimen exam is concerned. But see, once you will revise the whole concept, things will get much clearer to you. Okay, so now students, final remarks, just let me know if there is like any concern, any question, query you have with respect to taxation. You may please drop your concern in the dialog box. If there is anything else you need to ask, please let me know by dropping your concern in the dialog box. Okay, I'm just going to share my contact details again. Thank you for liking the session as in focus on what I know. Okay, so as far as the list is concerned, I'm just going to share that question list shortly. Just let me know, are you all a part of global group? You just, if you people are not already the students of VIFHE, then you'll have to register yourself with VIFHE for mock. And then they will guide you that how the things are to be done. But if you are already the student, then there's no need to worry at all, because they will tell you that how the session is to be connected, and they will be like sharing the dates very soon. Yes, they'll be sharing the dates and the way through which you need to be connected to the portal on the day of your exam. There's a question, I haven't covered corporation tax. Should I focus more on section A and B? Perfect that. No, you will have to cover corporation tax first and then later on come back to section A and B. Otherwise, I mean, your section A and B preparation would remain incomplete if you don't cover corporation tax. So you are a part of Global Group 5. So you all are a part of Global Group, right? I'll be sharing the message in the global groups regarding the links where the important questions and the other document, I mean, the pocket notes were shared. It is going to be reshared once again. And let me just give you the contact details once again. Just a minute. This is basically the number. All right. Is there anything else you need to ask me? Yes, you need not to attempt it before 23rd, right? So that we may give you a chance to attempt the mock, get it checked, and giving you a detailed feedback. Is this all clear? All right, students, now I'll be sharing the free material with you people shortly. And thank you so much for being a part of this session. Your grand revision, I believe, is going to be conducted on Monday. So their messages will be circulated in the morning, on Monday morning, hopefully. So, and I'll be dropping the agenda of grand revision as well on Sunday. That's tomorrow. And yes, $1 million questions are all taken from Kaplan revision kit, sorry. Yes, I'm just going to do it shortly. Once the session is over, I'll be sharing the links with you. Yes, grand revision session will be conducted live for the enrolled students on Monday. Hopefully, their messages will be circulated on Monday in the morning. Okay, now the time has come to wind up the session. Thank you so much for being a part of this session. Good luck to all of you and have a happy weekend. Goodbye.